Welcome back, and joining me with more insight on the day's trade is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. I had actually thought that the tension between Donald Trump and Powell had dissipated, but it seems that at this point Trump is at war with everyone. And of course, the latest person in the firing line is Fed Chair Jerome Powell. Trump saying that he cannot wait to get rid of him. What didn't he like about Jerome Powell's comments at the Economic Club of Chicago yesterday?
I decided to go back and watch a recording of that interview. And Powell was essentially, reiterating the virtues of the current setup and the importance of the independence of the Fed as an institution separate from, call it, political government.
Yeah.
Not prone to political interference. The same approach you would take with the courts. Well, frankly, we know Donald Trump has been trying to subjugate the courts. And it seems that he didn't like the speak about independence. And the other issue, of course, was that he reiterated the inflation mandate, of how tariffs have increased the upside risk to inflation, and how therefore that's something that, in addition to the instability, is something they need to consider before they continue cutting rates. Frankly, you can't cut rates if you expect increases in inflation. So Donald Trump doesn't like that because it directly contradicts his neo monetarist theories around tariffs magically decreasing prices through and creating wealth. So this is just the latest constitutional crisis, something that I guess the world should have seen coming. And he speaks to looking forward to the termination of Powell. He doesn't technically have the power to fire Powell. In terms of jurisprudence, he's not allowed to remove the head of one of these independent agencies, but there's a good chance that he intends to try and challenge that. And then, of course, it will have to go through this court process, or Powell could decide to resign should Trump try to fire him. So, that clearly looks like a little bit of a crisis, and frankly, perhaps a further derating of the dollar and U.S. treasuries and trust in the U.S. system altogether.
Okay, thank you for clearing that up, because I've been wondering then what happens when the president is at loggerheads with the chair of the biggest central bank in the world. Well, talking about central banks, as much as Trump has also been fighting with the EU on tariffs, but commending Europe for decreasing interest rates, and that's exactly what the European Central Bank did today. They cut interest rates. What's your take on that move at this point, and maybe just also the words on their outlook?
So essentially, the outlook is negative, and they're trying to be proactive around that. And I guess somewhat counterintuitively, because you would think, given how late in the game the European Central Bank was created, one would think it would have a more modern monetary policy similar to ourselves. Turns out we've got the most progressive monetary policy in the world, and these guys also have a dual mandate, both fiscal considerations as well as monetary considerations. And because they anticipate that this instability, that this uncertainty, that these tariffs are going to put an overhead on growth, they are trying to preempt that against, to be fair, the background of a relatively benign current inflation print. I don't think their inflation outlook is actually, all that rosy. They perhaps anticipate a rise in inflation, but at least, unlike the Americans, they're sitting on very low inflation at the moment. I think it's around 2%.
Yeah.
And we had that print earlier in the week. I can't recall precisely what it was, but it was bang in line with expectations and sort of continuing to bottom out in terms of trend. So they do have a little bit of headroom and trying to support the economy by cutting rates and hopefully keeping the wheels grinding against this very uncertain backdrop, where frankly we are seeing people standing back from making investments, which ultimately becomes self-fulfilling. Just that fear of the unknown makes allocators of capital hold off on investment, which in time depresses economic growth. So that's precisely what they're trying to stave off by cutting rates further, maybe
Yeah.
using that as a mechanism to try and stimulate this economy.
Well, while we are in Europe, let's go to another part of Europe, and that is the UK. We actually had British oil giant BP with its annual general meeting today. And I mean, ahead of that, there had just been a lot of news about them having an identity crisis, also including the strategic U-turn that they took on investing in on green investing, and they also had a re-election of the chair. How chaotic has that been, and how chaotic can it be, looking at the fact that there are a lot of shareholders that are disgruntled?
This is an interesting one, and it's also one that's weirdly covered by the media. I read a lot about it being fully expected for him to be voted out at this
Yes.
meeting, which
Yeah.
was nonsense. That was never the
Okay.
case, and he ended up going, getting re-elected with what 76% pro votes, and that dissent has gotten, I think, very little to do with the green economy issue. Okay, so let's start that.
Yeah.
So there were two strategies amongst these major energy companies
Yes.
over the last 10 years or so. Some of them decided to try and take leadership. We are energy companies, so we should take the reins and try to transition to the new green
Yes.
energy economy, and be leaders in that. And some of them said, listen, we may be dinosaurs, we may be dying businesses, but this is what we do well. We drill oil, we extract gas, we prospect for those resources. That's our speciality. That's what we should be focusing on. Even against the backdrop of a diminishing overall industry, just keep doing what we do well. And guess what? The latter approach was the much more successful one. Companies that didn't try to pivot into other industries, that
Yeah.
kept on focusing on what they're doing and essentially relying on the allocators of capital to shrink their industries over time. Even though I'm the best driller or the best extractor or the best refiner, if banks won't lend me money and investors
Okay.
won't allocate capital to me, my business will diminish over time. It's not my job to
Okay.
replace my own core function. And the likes of Chevron and the American extractors and Shell, to a lesser degree, took that approach, and the likes of BP and a couple of others, Total somewhere in between, took the trying to be leaders in the green transition. And
Yeah.
frankly, what did they know about this? So I think part of the problem is that Helge Lund was leading this green energy revolution at BP
Ah.
since he came in. And essentially, he's now the guy doing the about turn. So there's a loss in credibility. But
Okay.
ultimately, the investors want BP to focus on what they are good at. BP have the rights to some really nice assets. They've their rights in the US have shown to have bigger reserves than expected. So ultimately, I think investors want them to refocus on what they do
Yeah.
and not rely on the board themselves to transition away from what is ultimately their core function, extracting fossil fuels. So, ignoring all the noise, he was never going to
Yes.
be voted out. This is still the 24% that voted against him is still sort of a demonstration of low confidence, and it is apparently one of the lowest re-election votes ever.
Yeah.
But the guy's stepping down anyway, so it's all symbolic. Ultimately, the majority of shareholders are looking for them to focus on their core function.
Ah.
And the rest is a bit of noise. Whether they manage to pivot, given that they've fallen behind their peers so much,
Yeah.
that remains to be seen. That will be interesting.
All right. Well, thank you so much for clearing that up and really just helping us sift through the noise, Cobus. Let's quickly get to your stock pick. I think we have about 30 seconds.
My stock pick is Discam. I don't typically like picking expensive stocks like this one, but in the current uncertain environment, why not go for quality? It's gotten reasonably cheap relative to history recently. They had a little bit of a disappointing trading update. We're expecting results from them in about a month's time, which I think will steady the ship. It's at around a 22 forward at the moment versus the 28 forward on clicks, which is of similar quality, a similar quality and a similar strategy. And I think there's significant upside on the stock, given that perhaps the store rollout was a little bit slower than expected, and we had a bit of a disappointing revenue performance because of significant promotions being run in the beauty sector in particular. If we just see that those trends reverse a little bit, and perhaps the market being made more comfortable with the store rollout strategy and the continued growth strategy, if they can do 15% HEPS for the full year,
Yeah.
15% HEPS growth for the full year again, I think we'll see a significant re-rating back to those levels we saw before this update. I think it's quality, it's SA Inc.,
Yeah.
and it's at a reasonable price given the growth prospects.
Okay. Thank you so much for that very, very insightful analysis, Cobus. Really appreciate it. And do enjoy your long weekend. That was Cobus Potgieter from Southern Cross Capital.